As I said, if I'm going to be with you throughout the month of July and you're going to listen in to me, I think it's important you understand my approach a little bit, certainly my approach to the market. I'm obviously going to go through some risk management stuff, psychology, technical analysis, how to put a plan together and develop a strategy. But I think it's really important you learn about my core trading beliefs. These are the things that I believe are true in the market, so you understand my approach a little bit better. These are in no particular order. We'll just go through them one at a time. Firstly, I believe trading is a process. I believe it is a logical, step-by-step sequence that you work your way through on a regular basis, always that way, always going through the sequence in that particular order. It's a logical sequence. That sequence allows you to follow all your trading rules. Remember, your trading rules are compiled together in your trading plan, and the process allows you to work your way through implementing those rules. I think when you don't have a trading plan and when you don't have a process, you look at the market very randomly. You indiscriminately look for trading opportunities, and I can assure you that is a poor way to approach trading from my experience. So it is important to develop that strategy, the set of rules in your plan, and then we have basically a trading routine, a process that we follow a logical step-by-step sequence to work our way through that plan and implement that strategy. I believe in consistency. I'll talk about this more perhaps throughout this month. In another session, I'll talk about the importance of consistency. So similar to the process and doing the same things over and over again, we need to find something, develop a strategy that gives us an edge. And when we have that edge, we can apply that edge with ruthless efficiency, apply that edge that same way all the time. And that's the key. And I'll use the analogy of a casino, and I'll talk about that when we get to another session talking about consistency. But again, I don't want people to trade randomly and indiscriminately and just look for all these different trading opportunities for a whole wide range of different reasons. I think it is really important to find something that will work, that resonates with you, that you're comfortable with, and then we apply that particular strategy and we do it with great consistency. I believe less is more. I believe trading less is better for you. Now, not too many brokers will tell you this because they want you to trade and they want you to trade lots and continue to trade. But from my experience, I think trading is less is better for you. But the interesting thing is that's counterintuitive. What are we doing here? We're trying to trade. Why are we trying to trade? Well, we're trying to make money. And it sort of stands to reason a little bit. It's intuitive to think that the more times I trade, the more opportunities I'm giving myself to make money. So it stands to reason that, well, I need to trade lots. I need to give myself lots and lots of different opportunities to make money. So it's very easy to think, well, I need to be quite active and I need to trade lots. And the more I trade, the better I'll be. And from my experience, it is the opposite. And I'm not saying you don't trade, because that's a bit silly, but we need to sort of regulate and control how much we do in our frequency. And I do very strongly believe, and I've heard this from lots of different people too, and I've met a lot of different traders over the years, that the less they trade, the better their results. Anyway, something for you to think about. I've mentioned this a little bit, and that is having data drive our decision making. I'm a very firm believer in that. I'll talk about that a bit more as we go on through this month as well. And that's what I think very much underpins technical analysis. Technical analysis, is observing trends and observing chart patterns and observing, key levels, support and resistance, monitoring what happens with those trends or patterns or key levels, making observations, applying our rules objectively, allowing the data, allowing price to drive what we are doing in the market, as opposed to maybe listening in on the news or trying to do a bit of fundamentals of it or the like. I also believe that your best trades will take time. Very rarely will you get into something and very, very quickly within the next 30 minutes or an hour, does that trade explode in your favor, in the direction you want. Doesn't happen very often. And if it does, it may not happen again for a long time. You'll find that your very best trades take a long time to develop and end up being your very best trades. And that to me just sort of reinforces the importance of having that discipline and having that patience to stick with your plan and make sure you do what your trading rules say you should be doing. I'll certainly talk about this a little bit more as well, and that is don't use things. And when I say things, I mean, say, a signal, a particular technique, technical analysis technique, even something as simple as a candlestick pattern. Don't use something in isolation. Don't use anything in isolation. What you want to do is develop a signal or an idea, a strategy, a technique, but then combine it with different things. And those different things might be, looking for key levels, looking for patterns, looking for candlestick patterns, looking for trends. We combine different things to form this picture of what we think price is going to do. And then that's when we can apply, our rules to that picture, that observation, and, obviously try to take advantage of that probability. And we do that through speculation, obviously, and that's opening up trades. But I don't believe in using things in isolation. I mean, I could tell you now a simple strategy, and that is whenever you see a doji candlestick where the range from high to low is more than 50 pips, you go in the opposite direction from what it's been doing the previous 3 periods. That's a strategy right there. Is it the best? Probably not. Could we make it better? Could we improve it? Yes, I think we can. How do we do that? We combine different things to ensure that the signals we get from that are higher quality. Not just quantity, but higher quality. And coming back to my less is more, I believe in quality over quantity. I think a lot of people want quantity. They want quantity of trading opportunities. I don't. I want quality trading opportunities. Quality over quantity for me every day of the week. Less is more for me. The less you trade, the better off you'll be. And finally, and I can't overstate this, and again, hopefully this comes out quite clear as you hear from me throughout the month, I believe in simplicity. I believe in keeping things simple. Certainly the simpler you keep them, the easier it is for you to follow them. But I really do believe that simple techniques and strategies do work, but that can be counterintuitive. And I tell you why, because I went through this myself. When I started off, I didn't think trading would be that difficult. So we get in with all this enthusiasm and it doesn't work out, and we're just frustrated, infuriated, stressed. It's not working out. We realize trading is a bit more difficult than we thought it was going to be. And when we accept that as a reality, that trading is now difficult, we intuitively think that we need to develop a complicated strategy to have any chance of being profitable, of being successful. And we certainly dismiss the idea that a trading strategy can be simple. Because if I was to say, look, try this strategy, someone would go, oh, no, that won't work. That's too simple. No, trading's more difficult than that. You need something really complex and complicated. So it's counterintuitive to sort of think that a trading approach and trading can be quite simple. Again, we'll talk about this in more detail throughout the sessions, but to me, your trading plan should encompass 3 areas, the 3 M's, your money, methodology, and your psychology or the mindset. And it is really, really important that essential, critical that you develop a strategy or a plan that is right for you, and then implement that plan with the right mindset. Can't overstate the importance of developing a plan that you're comfortable with, that just suits you, works for you, you're comfortable with, you have the confidence in, and you can implement that using that routine, using that process, and implementing the same sequence, the same set of instructions over and over and over again, every day, every hour, whatever your trading strategy demands of you. That's the key, right? Developing something that works for you, and then implementing that with the right mindset, right? The right approach, the right attitude, the psychology of it all. And again, we'll come back and we'll talk about those 3 M's in a little bit more detail throughout this month when I revisit and come back and do more sessions with you.